Welcome to RegTalks, a podcast dedicated to the ever-evolving world of RegTech and financial regulations. My name is Claus Christensen, and I'm the CEO and co-founder of Know Your Customer. We are an award-winning RegTech provider specialized in corporate client onboarding, KYC, and anti-money laundering process digitization. Today, it is my great pleasure to welcome Musheer Ahmed as my guest. Musheer is the founder and managing director of FinStep Asia, which provides advisory on fintech and digital ecosystems in Asia. He's also the co founder and board member of the FinTech Association of Hong Kong and has an extensive background in financial services and technology, having been a global markets trader for a decade and a management consultant following his MBA. Musheer, thank you so much for being here.
Pleasure being here, Claus. Thanks for having me.
Musheer, we met many times in the last few years, but we probably first crossed paths when I joined the FinTech Association in Hong Kong, and we both took part in many of their events. It might have been the RegTech Live event in 2018. Do you remember?
The RegTech Live event was one of the first ones where you participated, and with the FinTech Association, it was a lot about connecting and showcasing the top fintechs that we have in Hong Kong. And with Know Your Customer, that was one of the things that we highlighted during that session. So yeah.
Yes, and we were extremely grateful and still are about that exposure that we got early on in Hong Kong, which developed into a very, very important market for us, obviously. Your track record promoting and championing tech innovation in financial services is truly incredible. But I was wondering, when did your passion for fintech and regtech start? Can you pinpoint a specific episode or moment in time?
As I said, I come from a background of trading, but when as a global markets trader, I started my career on the computers as an electronics trader for Futures First, who are part of the Hurston Group. So that was when there was a transition that was taking place in the ecosystem where traders were used to trading in the pits and determining things through more looking at people's faces, knowing who's who, what company, what mood, what's happening, to now just looking at numbers and trying to figure out what's the best trade based on news flow and information. So that was, in a sense, if I look back, that's 15 years ago, was my introduction to fintech. Being a highly regulated market, there was also a lot about looking at, we had to monitor. I was managing a desk of 35 traders when I was in Mauritius with my branch and previously as well. So you're constantly monitoring your traders and ensuring that they're sticking to the rules, they're not spoofing. But what really brought me into the fintech and regtech world was during my MBA, which is a joint program between University of Hong Kong and London Business School. I was in London for a few months, and the school organized a trip to Level 39, which is based in Canary Wharf. It's run by the Canary Wharf Group, and it was meant to showcase startups. And that's where I met fintech startups. So when I got back to Hong Kong in Q3 of 2015, there's hardly any discussion around fintechs. Right? There's a bit around startups, but nothing around fintech. The first event I attended was 25 to 30 people in a small room in the Canadian Chamber of Commerce with Henry Slanian, James Lloyd, Lawrence Morgan as the speakers. And I look back and I'm like, all these people could fill large conference rooms on their own right now, but it was very little exposure. And that's how I started getting into fintech. On the second hand, I joined as a management consultant with Grace Park Partners, who provide advisory to tier one banks and brokers on technology around electronic trading and as well as risk and regulatory advice. I was co-heading their risk and regulatory practice for Hong Kong, which meant looking at how technology is reshaping risk and regulatory reporting, as well as the regulations that were coming in specifically around technology, right? So doing presentations at the SFC, etc. So that's where my interest actually largely around regulations was driven through when I was with Grace Park, because I had to know all the SFC regulations, look at what HKMA is doing, what's happening with Europe, all of these and how they are impacting the trading businesses where it all kicked off.
Very interesting. You mentioned HKMA and SFC in Hong Kong. Who was driving it more at that time? Now it's the HKMA that is most visible.
I think it still is the HKMA driving a lot more. We also need to be cognizant of the fact that in some senses the biggest change in business models from a technology perspective has happened on the retail banking side and less so much on the security trading. And I will qualify that. If we look at fintech, and when I talk about fintech to people, I showcases examples of when technology has been reshaping financial services. The first one that I use to talk about is about the telegram, which is mid to late 1800s. One of the main known uses of the telegram was to send news across about stock markets, especially between London and New York. So you can see that technology was involved in financial services all the way back about 125 to 150 years back, and that's because of trading. Then you go into the 60s after the ATMs, etc. You're talking about trading on computers to use of AI. Millennial Capital has been using AI for trading since the mid 80s. And it's also been a very key differentiator for brokers. That's how good is your technology, how fast is it, how robust is it. So I think from that perspective, the SFCs need to drive changes in the market are probably not as high because a lot of things was covered or already under supervision. From that perspective, HKMA had to drive a lot of changes. At least in 2018-19, up until then, 25% or more revenue of HSBC globally is driven from Hong Kong, and most banks are making double digit. People didn't necessarily have the need to push and bring more innovative products, right? There's no big competition because the market is doing fairly well. While the HKMA have realized that there is change that's taking place, and for innovation to be driven and for competition, they need to drive more changes. Now, asking incumbents to adopt something doesn't go under necessarily their model, right? You can't just tell a bank, okay, why don't you use eKYC? That's a bank's business choice, and it's their option. So when they started and initiating things like virtual banking and then allowing eKYC for some firms to do, that in a sense gave that nudge for everybody to go virtual. The key element that's happened is they've gone from saying, yeah, it's there, technology is as is, to and we don't need to really regulate it per se, to now recognizing that there can be different business models. They're recognizing that there is need for changing the regulation in itself and switching from what was more prescriptive regulations, follow the word exactly, to principle based regulations. I think that's been a big change now that we see in Hong Kong. And credit does go to HKMA, who have not been shy of looking at innovation. And if we had to pick somebody who's leading the West, I would say HKMA is a lot more proactive and have been pushing quite a few different models. But also it's consumer driven, which is changing consumer behavior in Hong Kong.
We are very happy about HKMA's involvement championing RegTech solutions at all, because we don't see that all that much in other regulators.
I come from India, right? And eKYC in India is just coming on board, which is frankly a surprise given that we've had Aadhaar for quite some time. And the whole idea was use of digital identity. You have all the tools, but the regulators following up, it takes time, even in jurisdictions that may be seen as digitally savvy, if I may use that term.
Well, India is a good point, actually. I'm always fascinated by the development of fintech and regtech in markets and countries where we are, as a company, not yet present. I would be really interested, since you, as a co-founder of India Tech Hong Kong, would know a lot about it. What are your thoughts about the Indian financial technology ecosystem? How has it evolved over the years and even recent months?
It's a tremendous ecosystem, and I'm not saying that because I'm from Bangalore and I'm very familiar with technology, or because now I'm Indian, but frankly, we are the third largest fintech ecosystem in the world after the United States and mainland China. Now, when it comes to B2B, I still feel UK is probably the leader, but India is getting there very quickly. What's happened is the India Stack. So the India Stack is a technology platform infrastructure that has been developed by the government, right? Which includes the biometric layer, which is Aadhaar, which now has 1.2 billion people on it. Now that has enabled financial inclusion of hundreds of millions of people who now get payments in their bank accounts straight to their banks. So I think India has developed from there, but other key element is our fintech players have gone from replicating models that existed in other ecosystems to now you have solutions in multiple languages which are catering to Indians' needs and more tailored to what the local markets are demanding. And it can be very different in a city to a tier two center to the villages in India, right? So you have seen that maturity in the ecosystem, and funding has significantly improved. We haven't seen any Indian fintechs list yet, but I expect that to happen in the next year or so. Thirdly, is the entry of India's largest company. It has truly democratized data in India. We have the cheapest data anywhere in the world. We've almost doubled the number of internet users in the last 3 years. The banks have been fairly good in terms of providing, leveraging of technology, but I would say there's a lot more that is feasible and possible. As much as we want technology to change everything we do, regulations are going to play a very big role.
What I find fascinating is that if you come from Europe or from the US, it's so interesting to look at emerging markets and developing economies and look at how the user experience in these new financial products is different from what we are used to, and the development actually has been faster. Is there anything that you would point out that is different in usage of these fintechs?
I think the key element is the percentage of banked versus underbanked or unbanked. Now, and a classic case to compare is Hong Kong versus mainland China. Hong Kong being fully banked almost, but they don't have that trust on technology. So the key element is going to be people trusting the technology. Say what you will, why is PayMe the largest wallet in Hong Kong? What 1.5, 2 million users or thereabouts now? That's 30% of the population, which is in sync with HSBC's percentage overall, right? It's why are people comfortable with it? Yes, they have a great product, but you can see that people are very comfortable with PayMe because it's HSBC. And I'll give you an example of a person whom I know very well, a Hong Konger, born and brought up here, has exposure to studied overseas, and they don't use any virtual banks, any of the apps, etc. Right? They don't like using it, but very tech savvy, so there's not an issue. When I posted about the Mox Bank, I did an unboxing of their card, and they were like, I was like, Mox by Standard Chartered. They were like, oh, Standard Chartered. When they heard a bank's name, there was a positive reaction because they felt, this is not going to go away. So when you have a fully banked market, your penetration and your cracking the market is going to be significantly tougher, irrespective of the pain points that people may have. Banking inertia of leaving your bank account is very high. People have a high inertia changing bank accounts. They don't mind changing for transactions. They don't mind changing the credit card. But when you talk about salary accounts, there's a huge inertia, and people are not comfortable anywhere in the world. I don't think it's just a question of developed world. Whereas when you talk about China, you talk about ASEAN, you talk about India, you're coming from markets where the banking population itself was at least below 50% or lesser. In Philippines and parts of ASEAN, the 80% of the population has a Facebook account and 20% of the population has a bank account. So there, when technology solutions come in, they are going to use them quicker. There is the leapfrogging that's taking place, and they don't have to have gone through the whole process of banks and other things, and they know how to bank. But yeah, they're like, we don't have a bank account, so if you're providing me any banking services, I'll lap it up. Now here, regulations have played a key role in when it comes to digital IDs. And I think what the HKMA have done and a few of the other regulators have actively done and should continue doing is using a tiered system. Frankly, within a country's ecosystem, there isn't really money laundering there. It's cross border where AML kicks in. Now, here you can see what China did. And I think that was a very good example about regulations. China was very prudent in the sense of allowing ecosystem to grow because they had the big banks, which still are among the biggest banks in the world by asset, but they also had hundreds of millions of people unbanked. So they allowed fintechs or technology players to come up with solutions and watched it grow. Once they became systematic, they brought in regulations or clamped down. So if you take Alipay, for example, escrow accounts, etc., they started in 2005, 2006. Took about 10 years for limits to be brought into that by the regulators. It's narrowed down to 3-4 years to 5 years now, or even closer. Credit and lending, we saw that big clamp down end of 2018, which is now reduced by over 90% the credit players and lending players in mainland China. because they brought in more norms and tightened it, but they allowed those models to progress.
That is the thing that I found so fascinating. The different speeds. I remember I was in Shanghai in 2015 and went out with a bunch of colleagues for a great Chinese lunch, and I paid for the lunch, and they all paid me back on WeChat. And that is how I got my first WeChat wallet. And I found that fascinating. This was 2015. I went back to Ireland shortly after. And in Ireland, they only started introducing contactless payment at that time. But that was still far, far ahead of the US, where you still were swiping credit cards and had to sign them, you know?
So think about like Ireland being the payments capital of Europe. So many payment players have come out of Ireland. And my experience is the same. 2014 August, when we did a month in Beijing, and yeah, I had my WeChat Pay, and everybody's transferring money. In today's world, it was an integrated platform, and so platforms I think is the major game changer. You can do almost everything. I like to call WeChat in a hotel WeChat. You can check in, but you never check out in some senses. And the key element there being it encompasses all walks of your life, everything in your life, from professional to personal and social, right? All three in one place.
Our lives are migrating online at an unprecedented rate, especially since pandemic. And so much of our economic and social activities is facilitated online, or at least digitally connected in some way. So that digital identity is now very, very important. And KYC is related to that. So we're talking not just about anti-money laundering related KYC, we're talking about identifying people so that they have secure access to their online identities. We have one final question that we ask all our guests. If tomorrow you woke up and somehow you had become the global financial regulator, what would be the first thing you would think to do, and why would that be?
The first thing I would do is to create regulatory framework for digital ecosystems end to end, right? Not as an evolution of existing regulations, but from scratch. That's what I would do. And why is because you do need to radically change how you build regulations, keeping big tech in mind. How would you build your financial services regulations? I think that's going to be a key, because I also feel the big tech firms have an advantage over incumbent banks when it comes to regulations. And that's why a lot of people give stick to the bank saying, oh, why don't you offer this? Why don't you offer that? And then the fintech is doing this, the tech fin is doing this, but why aren't you doing it? Because the regulator is not allowing them to do it. And there's a compliance team sitting behind them, which is saying this is too much risk on our business reputation, so we won't allow it.
Thanks very much, Musheer. That was fantastic.
Thank you so much for having a pleasure, as always, to talk to you, and I hope to see you in person soon.
Thank you for listening to this episode of RegTalks. My name is Claus Christensen, and I'm the CEO and co-founder of award-winning RegTech provider Know Your Customer. If you liked the episode, please subscribe to the whole series and leave us a review. And if you'd like to connect with us, suggest a guest or a topic for an upcoming episode, please send us a message at info@knowyourcustomer.com or visit knowyourcustomer.com/regtalks.